Welcome to today's Explainer. Let's just jump right in. What if I told you the world's richest, most powerful country owes more money than any nation in human history? Today, we're literally pulling back the curtain on America's staggering financial obligations.
Seriously, think about it. How can a country keep borrowing massively year after year without just collapsing into a total financial crisis? We're talking about a nation that continues to build the world's strongest military, funds massive infrastructure, and remains the absolute center of the global economy, all while swimming in record-breaking debt. Is there some kind of hidden system making all this possible? Well, let's find out.
To really grasp the scale of this, we've got to look at the raw numbers. According to US Treasury data, as of June 2026, the national debt hit an astronomical $39.28 trillion. To put that into perspective, if you do the math, that breaks down to roughly $115,000 for every single living American. Actually, scratch that. It's even wilder when you realize this number officially exceeds the entire gross domestic product of the country.
All right, Chapter 1, what is national debt? Let's break it down.
At its most basic level, government finance kind of mimics a household running a deficit. Imagine a family bringing in 50 grand a year, right? But they're spending 60 grand. They have to borrow that $10,000 difference. Well, when the federal government does this year after year because tax revenues fall short of spending, that annual deficit just snowballs into our massive national debt. So the crucial point here is that when tax revenue just isn't enough, the US Treasury steps in and covers the difference by selling government bonds. You can think of a bond as essentially a giant IOU. Investors hand the government cash today, and the government promises, hey, we'll repay that money later plus interest. It's this exact mechanism that allows the debt to keep growing and growing.
Moving on to Chapter 2, Why America Borrows So Much. Historically, when massive emergencies hit, governments have a choice. They can raise taxes immediately, which, let's be honest, is incredibly unpopular and difficult, or they can borrow. So they borrow heavily. We saw debt spike during World War II to fund the military, right? We saw it again with the 2008 financial crisis stimulus, and most recently, during the 2020 COVID-19 pandemic, the government spent trillions in virus aid, pushing the debt to levels surpassing even World War II.
But you know, it's not just the sudden emergencies. Beyond the crises, there's this deep structural mismatch where everyday spending just fundamentally outpaces revenue. We're talking systemic factors like an aging population driving up healthcare costs from Medicare and Medicaid. Then you have massive defense budgets, Social Security obligations, and endless infrastructure needs. Add in fiscal policies like the 2017 Tax Cuts and Jobs Act that reduced federal receipts, and you get a perfect storm. Sluggish tax revenues plus higher spending, that's a recipe for trillions in new debt, for sure.
This brings us to Chapter 3, Who Lends Money to America?
Now, you might be wondering who is actually footing this enormous bill. There's a super common misconception out there that foreign adversaries own the vast majority of U.S. debt. You hear it literally all the time. But if we actually look at the Treasury's facts, they reveal a totally different story.
The data from the Government Accountability Office shows a really fascinating split. The debt basically falls into two distinct buckets: debt held by the public and intragovernmental holdings. And here's the kicker. A massive chunk of the national debt is actually money the government owes to itself. It's like the Treasury owing money to the Social Security Trust Fund.
When we break that ownership down even further, it turns out almost 50% of the total U.S. debt is owned domestically by the Federal Reserve and those intragovernmental accounts. Another huge slice is held by domestic private investors, so we're talking American pension funds, mutual funds, and local banks. At the end of the day, only about 33% of the publicly held debt is actually in the hands of foreign entities.
And of that 33% held by foreign investors, who exactly are they? Well, close allies like Japan and the UK hold massive shares. Japan holds roughly $1.2 trillion, China holds about $1.1 trillion, and the UK holds $400 billion. So why are they buying? Simply put, global investors consider US Treasury bonds to be among the absolute safest financial assets on the planet.
All right, Chapter 4. Why doesn't America go bankrupt?
Okay, this brings us to the real aha moment of this explainer. This is the hidden system that lets the United States play by entirely different financial rules than you or me. Because the entire world relies on the US dollar to do business, there's just this insatiable international demand for US Treasury bonds. Ever since the 1944 Bretton Woods Agreement, the dollar has been the world's primary reserve currency. It is the go-to money held by companies, central banks, and major financial institutions all over the globe.
So this dominant status acts as a literal hidden shield. Because everyone desperately needs dollars, everyone buys U.S. sovereign debt.
This massive global demand artificially lowers America's borrowing costs. Economists actually estimate this status drops interest rates by 10 to 30 basis points. Plus, recent research suggests this unique setup increases the sheer amount of debt the U.S. can take on by a staggering 22%. And for decades, this whole operation was backed by the petrodollar system, where oil was exclusively priced in dollars, guaranteeing that global demand.
Which leads us to our final section, Chapter 5, the looming threat.
So, that hidden shield we just talked about, well, it's starting to fray at the edges. For example, that decades-old agreement with Saudi Arabia to exclusively price oil in dollars, it ended in 2024. As geopolitical agreements like the petrodollar system shift, Gulf states and other nations are stepping back from buying US Treasuries, and when foreign demand drops, the US has to offer higher returns just to attract buyers. That means US bond yields and borrowing costs are inevitably going to rise.
And we are already seeing the immediate consequences of these rising rates colliding with an ever-growing pile of debt. The numbers from the Government Accountability Office are mind-blowing. Annual interest payments on the debt have nearly doubled in just 3 fiscal years. We literally went from paying about $500 billion in interest in 2022 to a staggering $1 trillion in 2025.
To put that $1 trillion into perspective, listen to this. In 2024, federal interest payments on the national debt officially surpassed spending on both Medicare and national defense. Think about that for a second. America now spends more money simply servicing its past borrowing than it does on protecting its citizens or funding healthcare for the elderly. Wow.
And the math just gets tighter from here. The Congressional Budget Office projects that if current laws don't change and nothing is done to fix this structural mismatch, paying interest is going to become an overwhelming burden. By 2053, interest payments alone could eat up nearly 25% of all federal revenues. That means a massive chunk of every single tax dollar collected will go purely toward paying off old debt, leaving fewer and fewer resources for things like infrastructure, education, or fighting the next big emergency. As the math becomes more daunting and political polarization makes fiscal reform harder and harder, it leaves us with one profound question about the future of the global economy. How long can this hidden system, this shield of the global reserve currency, actually sustain the weight of tens of trillions of dollars? It's absolutely a question that will define the financial reality of the coming decades. Well, thanks for joining me on this explainer. Keep questioning, keep learning, and I'll catch you in the next one.